I'm afraid Bitcoin might have pressure below 20, around 20, and at some point it's going to get above 100. I just got to see how we get through this. Bitcoin, Ethereum, and Bloomberg Galaxy Crypto Index. I'm fully very bullish in the big picture, but very concerned about the macro ebbing tide of what I see potentially a bear market in stocks. So I view Bitcoin as global digital collateral in the world going that way, and every single risk manager on the planet, every day that goes by, they all know I have to have a piece of this. And I think what's happening.
Mike McGlone, the Senior Macro Strategist at Bloomberg Intelligence, is renowned for his exceptional intellectual rigor and analytical prowess. Over the years, his insights have helped countless investors achieve unprecedented success. In recent times, McGlone has expressed optimism about Bitcoin and other digital assets, despite their seesaw price movements. However, McGlone has cautioned that in the short term, a bearish stock market could lead to a significant drop in the value of Bitcoin and other cryptocurrencies. While he is confident that the crypto king will eventually reach his long-term price target of $100,000, McGlone believes that Bitcoin's performance is still largely dependent on the price movements of the stock market. According to the expert, the duo of Bitcoin and Ether have hit a key resistance at crucial pivot points at $30,000 and $2,000 respectively. In previous comments, McGlone has expressed positive sentiment toward the future performance of Bitcoin. He once predicted that Bitcoin's price is poised to continue rising. On his Twitter, McGlone posted that don't blame $2,000 Ether, $30,000 Bitcoin, if risk assets peak markets may be in the early days of adjusting to disinflation, which is normal in recessions, but the Federal Reserve may never loosen with the ease it has in the past. Enduring deflation could be reciprocal. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates.
What's happening lately with Bitcoin running up around almost back up to now 30,000 with the stock market breaking down, it's hitting to that inflection point that I've been waiting for a while, and I'm quite impressed that Bitcoin is going to be starting to trade more like a risk-off assets. But cryptos are still the riskiest assets on the planet. They're fastest horse in the race, and Bitcoin's just the least risky. So I'm a bit stuck in the middle on Bitcoin. On big picture, I don't see anybody who's allocating to anything about gold anymore has to have some Bitcoin in that space. I fully believe what Saifedean Ahmed said in his book, The Bitcoin Standard, that central banks will eventually hold Bitcoin. But it's that near-term issue I'm worried about. If I'm right that stock market breaks down for a normal recession, it's going to pull down all risk assets. But what we're seeing lately is great. Is looking at like the bank indices breaking down and Bitcoin breaking back up. That's a cool indication of where I think we're going. People are realizing that this digital asset that when I first heard about it, I thought it was silly internet money, is becoming global collateral. And I fully expect that to happen in the long term. But I'm still really worried about the ebbing tide. So I've got to lose my bearishness in the stock market or see more what's happening where stocks break down and Bitcoin's inching higher. This divergent strength is just what I was expecting. It's just I'm still worried about a rut in the stock market. I mean, I fully expect a 20% drop in the S&P 500. And if I expect that, I expect crypto assets to.
According to McGlone, the key trigger will be when the U.S. stock market continues to underperform the rest of the world, and gold will be the shining star. Dollars tumble and weaker U.S. Treasury yields and call for the Fed to cut interest rates were all big movers for gold prices. Recently, McGlone tweeted that par as the S&P 500 may not be too far for gold per ounce. Gold at about half the level of the S&P 500 in 2Q may have a performance advantage, particularly if the U.S. enters a recession. The enduring history of booms that go bust when excessive liquidity is removed may guide.
I think the dollar is due for a pullback. The key thing to remember about the dollar, when you measure the dollar versus a basket of fiat currencies using the Federal Reserve's trade weight rated dollar index, it goes up over time. The only time it goes down is after it goes up a lot. Well, last year it went up a lot. So it's in a pullback mode. Fed pivot might be bad for the dollar. But the fact that the euro made gold made new highs in terms of the euro and made new highs in terms of the yen last year because of dollar strength. But to me, it's more just an outright gold thing. But I think, yeah, you have to look at it as a bit of a reciprocal to the dollar. But I'm not so bearish in the dollar overall. It's just this asset gold I see as it's just a bull market waiting for a catalyst. It's getting it. It's that 2,000 level is just hurting people. I think what it's waiting on is that Fed pivot. And the key thing I think that's really going to kick in for gold to be an enduring bull market, just pop the next key resistance, round number resistance around $3,000, will be when people start realizing that we are in a elongated bear market in U.S. stock market. So get that S&P 500 to start ticking below 4,000 and start doing what it normally does in recession, and gold what it normally does in a new U.S. recession, and bonds what they normally do in U.S. recessions. I mean, bond yields going down, stock market going down, and gold is just so ready to take off. And I look at this as my key question I like to ask, Matt, is what stops this current trajectory from accelerating? And the fact that the Fed's still tightening, I think, is they're going too far. They're pushing the market to serious deflation, and I can point that out certainly with commodities, which is going to spark the gold FOMO to just take that 2 handle and switch it to a 3. Stock bull market, which is a consensus that the stock bull market is over, or the bear market, the correction is over, and just going to go back to that elongated uptrend. That could hurt gold. I'm very bearish the stock market. 1,000, the S&P 500 is just going to go to 3,000. Not a big deal. Not a profound statement to make in a normal recessionary environment. But I think it's those, the other things that are significant that should matter. It's the macro that I think is going to be most significant, and that is when people look. You got to mention the stock market, I think, because that is the main competitor for gold for the last decade that you mentioned.
In his tweet, McGlone mentioned the extreme scenarios for 2023 are that the worst is over or a severe recession is coming, and positioning risk versus reward may be tilted favorably toward the latter. Bitcoin and stock market indexes have bounced. The latest U.S. economic data suggests a recession is coming, according to the chief executive of financial advisory firm Longview Economics, and investors may need to prepare for some pain in the stock market.
I think we're kicking into an elongated recession, deflationary recession, which is just normal after the biggest pump in liquidity ever that's dumping, that will fuel the gold price. So yes, the key thing to make me wrong about gold, I think, is if I'm wrong and by the end of the year the S&P 500's here or higher. I think by the end of the year it's going to be knocking on a 3 handle in the S&P 500. I think we're heading towards one of the biggest resets of our lifetimes in terms of markets, and that's just studying pumps and dumps liquidity. Gold's in the center, and the key thing I ask myself every day, Matt, is I started saying this a year ago, is what stops this, and every day that goes by with this we're seeing in the bank crisis are just those kind of things. They're trees in the forest, and the forest is we are just on the back end now of the most aggressive Fed tightening ever, if you do it on a log normal basis from zero, and the most aggressive global central bank tightening ever. The long and variable lags have barely started. So to me, for the stock market to come out of this, at some point we have to have a long and variable lag from a period of easing.
The market veteran has become a top voice whose analytics and projections are highly anticipated by traders and analysts across the board. However, Bitcoin's recent price action indicates signs of weakness as the positive sentiment appears insufficient to break through the next significant resistance region. On this note, we conclude our video. Do you agree with Mike McGlone's perspective about Bitcoin surge, gold current standing in stock market? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.